Today, I'm exposing the 3 biggest lies that people are saying about the San Antonio real estate market and why you, as a buyer or a seller, could lose a fortune if you are not thinking about these things carefully. We're talking real data, we're talking real numbers, and we're talking real strategy to make sure that you are not making a huge mistake whenever it comes to buying or selling a home in the San Antonio market today. This is not the same market that we saw 1 year, 2 years, 3 years ago. Everything is completely different right now, and let's get into the first reason why. Lie number one is a pretty obvious one, and that is that prices have gone up recently. Not the case at all. So San Antonio specifically is in the heart of the entire kind of what I would consider softening of the real estate market. A lot of people, especially you guys in the comments, love to say how the market is crashing, going to crash. It's nothing sustainable. Prices are ridiculous, and we can't sustain this way. Well, numbers do say that there is some truth to some of that, and that's why I consider this more of a correction and less of a crash. Now, we have a 10% overall drop in the market prices in San Antonio, in the San Antonio metro area. That includes San Antonio, New Braunfels, and the counties surrounding it. Looking at those numbers as a whole, we're seeing, okay, yeah, there are some price drops. You see it. You see the new builders, they are dropping their prices. They are cutting costs quite drastically, and they are giving all kinds of crazy incentives in order to do that. You see existing homes that are sitting on the market and are not selling. But when you dig into the data, it is not just as cut and dry as the entire market is going down. It is very much compartmentalized into certain areas and certain price points and certain types of homes. So if you look at San Antonio, the upper tier of homes, what I would consider the luxury listings, those are only down by about 1.5% year over year. You look at the lower tier and you're looking at nearly a 5.5% drop in those prices. So the lower tier is where the prices are coming down more drastically. The upper tier, what I would consider in that basically that range of, okay, this could be just marginal error. It could be, just basically a flat market when you're talking that $600,000, $700,000 plus price point. Now, here's what you need to do with this information. If you're a buyer looking at buying a home, this is definitely what I would consider more a buyer-friendly market. You can go in there, you can ask for concessions, you can find lower prices, especially with new construction. You can get really good interest rates and get all your closing costs paid for and get a pretty good deal on an inventory home. But know that if you go to build a house right now, that needs to be a long-term plan, and even just buying an inventory home, honestly, because, this is like a new car sales market, really. When you buy that house, as soon as you sign those papers, if you try to sell it the next day, you're not going to make any money off of it. Even if you got a significant discount on it, there are going to be a lot more people going for those brand new homes than they are going for those resale homes. Now, for sellers, don't be unrealistic with your expectations. And again, I try to say this in every single video. If you're buying new construction, you need to buy with the plan of keeping it for 3 to 5 years, so you at least can pay it down a little bit. I always think it's better to put more down on that house rather than going for that 3.5% rate. Maintain that payment, keep that house, rent it out, make it a long-term investment, but try to focus on finding a house where you plan on being in that house for 5 years at least in this market, because you want to be able to pay it down a little bit, where if you do have to sell it, you have some equity where you can maintain that home and actually sell it for whatever the price is that we need to sell it at. You need to make sure that you're paying attention to these things and being realistic. If you're selling a resale home, do not price it with the intention of giving some wiggle room for negotiations. Price it right, or the house is not going to get shown at all in the first place. Okay, some of you guys may not necessarily like the price that it needs to be at, but talk to multiple real estate agents, interview some, see who you feel most comfortable with and who is giving you the best information, so that you kind of know exactly with your neighborhood specifically what is happening in the last 6 months, because the last 6 months, the last 12 months are completely different than 24 months ago, and especially different than 3 years ago. Kind of be a little bit more realistic with yourselves on the sales price, and make sure that you're not going to put yourself in a situation where you're going to list the house and go through all the stress of showings and getting it ready for marketing and doing any repairs that you need to do, and then pricing it wrong to where it sits there for 6 months without going anywhere. That's the biggest headache that I've seen come into people that are trying to get houses sold, is that they price too high from the beginning and they're fighting a losing battle from the very beginning. And this, of course, leads right into that second lie, which is it's still a seller's market and sellers have all the leverage. I have the house that you want. I'm going to be able to negotiate on my terms and my terms alone. If you have a house that you're trying to sell and you get a buyer that comes in a month later after you list it and they're willing and able and want your house, and you are stubborn and being a hard-nosed negotiator, and they want or need $5,000-$10,000 in concessions, but no, you're $2,000-$3,000 off from your bottom dollar. You already priced it high from the beginning. They want to do a longer closing, or there's all kinds of different things that can come up with a negotiation. The buyers right now are few and far between. You as a seller need to think about that and understand that that first buyer is likely going to be your best buyer. I've had clients recently, buyer clients of mine, that we've gone through and made offers on houses. The sellers were like, no, we're not doing that. That's too low, even though it's based off of our research for the comps in the neighborhood. And as any buyer should be right now, and as I'm advising my clients, you should not overpay for a house right now, because obviously between this year and last year, we're 3% down overall. So certain markets are the same way or even worse. That seller may sit there for a while and never sell that house and end up getting down to that price, and you've spent lots more expenses and utilities and property taxes and insurance and anything else that when you could have just sold it for the right price from the beginning. So that's just my advice to you sellers, is make sure that you're not thinking that you still have all the leverage. Be aware of your situation exactly, and listen to the advice of your real estate agent, and understand the market for your specific neighborhood, because again, it's different every single market. You may get in a situation where you have 2-3 buyers looking to make an offer at the same time in that first weekend because you priced it right. That's the benefit of pricing it right from the beginning. But if you price it high, you get one showing in the first 2 weeks and then nothing for the next 3. That's a pretty clear indicator that you do not have that house priced correctly. Another thing related to the seller's side is that, you can't just list your house as is and expect there to be a lot of people coming in and wanting to buy this house. Right now, because of the amount of inventory that we have on the market, if somebody walks into the house and they immediately find 3-4 things visibly wrong with the house that they're going to need to fix, there's a high chance that they're going to move on and find something else that is already turnkey that they don't have to do a lot for. People are wanting to see those little projects done. If you have water damaged floors, if you have dog chewed trim, if you've got paint scuffs all over the place, if you've got outdated countertops, and you've got just roof problems, AC problems, like all these things that somebody sees when they walk into a home, unless you're giving a great discount on the home and it's going to be somebody that can come in and actually spend the money, more of an investor side, or has some cash and can come in and update it to get a good deal on it. It's better for you on a financial investment perspective to put the money into repairing those things, so that you don't have to give a crazy deal on that house or have it sit on the market for a year and never sell. Look at it from a buyer's perspective. When you're getting your house ready to sell, make sure your agent's doing the same thing. And if that agent is me, we'll talk through all of that stuff. So and again, if you guys are looking to sell and want some advice on that, by all means, shoot me a message, send me an email. Would love to contact with you guys and have that conversation about what you need to be doing to get your house ready to sell, and see how I can help. Now, the third lie that a lot of people are saying is that new construction is the safest option to buy right now. I disagree with that for several different reasons, but I do think it is the right option for the right person. I've already mentioned it once in this video. New builders are offering crazy incentives across the board. I've seen people doing those 2-1 buy downs that have their first year interest rate at 1.9%. Doesn't make any sense to me, but the price, and these lenders are able, for these builders are able to do this, and that number is just such a great idea for you and for that buyer that it seems like they got to do that, right? But again, you have to be understanding of your situation. It is not the right time to buy for everybody. Like, if you're not in a financially good situation and you maybe are just strapped and you're trying to buy a house at the top of your affordable budget that the lender will actually qualify you for, it may not be the right time. Maybe you need to save up a little bit more and wait till you get either a new job or get a raise and get a little bit more money saved up. Let those interest rates come down a little bit. I mean, even with new builds, that 1.9% rate, it's going to be 1.9, then it goes up to 2.9, then it goes up to 3.9, then it goes up to 4.9. So they qualify you based off that 4.9% rate. But the big thing is that a lot of people look at that 1.9% rate and what their payment is then and think, oh, that's super affordable, but they don't think that they're about their payment going up $300, $400, $500 over the next few years just because of interest rate. That doesn't even count insurance. That's another big thing that people, and that some of these builders kind of do, that really throws off a lot of buyers that they don't really understand is that your insurance is going to be the lowest that it's ever going to be your very first year. It is going to go up. My personal example, I built a house. My insurance was $900 a year for the very first year. I've now paid $2,500 a year. So that's, what is that? A little over $100 a month that it's gone up just on the insurance. Property taxes, as values continue to go up. Mine personally, in the last, few years since I've been in this house, haven't gone up much because of the overall market dynamics. But if the prices do go up, your property taxes will go up as well, and your payment then will go up. For new builds, some of these builders aren't really as forthcoming with this, but a lot of times the property taxes are only based off of the land. So if you are looking and like, oh my gosh, my property taxes, I'm only going to pay $100 a month. Oh my gosh, this is amazing. And then that next year comes around and your tax bill comes out. Now you're paying, $500 a month for those property taxes, and you weren't educated on that, that itself can in turn create a very, very bad situation for you in a few years when you now can't afford your payment or not comfortably afford your payment the way you thought you were going to be able to. You also look at the prices. I mentioned it a minute ago. Buying a new home is like buying a new car right now. You buy a brand new home, turn around, try to sell it tomorrow, you definitely will not be able to sell it for that same price because not a single person is going to buy an existing home for the same price as a new home. And there is not anything you can do about that. You're going to have to drop the price to whatever the existing home sales prices are in your neighborhood. And vast majority of time, it's 10% less than what the actual prices are for those brand new construction homes. I see it all the time, and a lot of people get hurt by that situation. So when you are buying new construction, you have to pay attention to all those details and make sure that you're staying in that house 3 to 5 years. Let that builder finish building so you're not competing with the builder whenever you go to sell that house, and make sure that you can comfortably afford it and look at all the options, because those new builds can be a hidden trap that gets you in a financial pickle that you do not want to be in. Let me touch on a few things again real quick. With the buyers, you have a really good opportunity, especially if you have some financial capital and can go in and make cash offers. There is a lot of opportunities to get really good deals on some of these houses. There are some people that need to sell their homes. They've owned them for a while. They are ready to give a deal to get rid of this house, and you can get a really, really good price at 10-20%, potentially less than market value in the right situation. Not all of them are those situations, because there's a lot of people that are still very financially well off. They may be selling their house. It may have sat on the market for 120 days. It may have only dropped $10,000, $20,000, $30,000 on a higher priced home. If you're looking at $600,000, $700,000 homes, that's not a big number in the grand scheme of things. They may not need to give another $50,000 off. They may be at their bottom dollar that they're willing to give, and they're willing to let it sit because they can afford it. Now, you can find the right situation, the right person that maybe is needing to get out of that house, and they're willing, they own it free and clear, and they're willing to give it to you at a steep discount. Again, that is a rare situation, and you kind of have to sift through all the available listings to find those types of deals. That's something that I can do to help you out with all that stuff. But you have to make sure that you're aware that not every house that's been on the market for over 100 days is going to be willing to give you that good of a deal. Now, on the seller side, do those repairs from the beginning and price it right first. Like, that is the only thing that I can say. The best advice I can say as a seller's agent, you do some of those little repairs, make it to where somebody walks into the house and they can't find anything wrong with it. Now, you're not going to be able to do all the stuff. You may not have the financial ability to do all of it, but going in and getting those things done that you can, that are most important, that your agent tells you is most important, are vital. And you may spend $10,000, $15,000 doing that. It's going to save you $30,000, $40,000 and potentially a year-long grueling battle trying to sell this house if you do some of those things up front. San Antonio's market has shifted for sure. There is definitely some things to be paying attention to, but like I say all the time, I'm an optimist by nature. You guys can say I'm trying to be a salesperson if you want to, whatever. That's not me. But I'm an optimist by nature. I see the potential of San Antonio. I look at San Antonio from back in 2008 when we had a true market crash, right? San Antonio stayed flat, stayed level. There was not a huge dip. We had a big drop in the total number of sales, which is what we've seen now. Big increase in inventory. Prices dropped, a couple, 2-3% overall. Nothing like these major drops. I mean, you look at Austin, actually, in the last year, you got 10% drops year over year. So that's a market crash. 3% correction, in my opinion, and as long as that kind of stabilizes over the next couple years, I won't need to revise that statement at all. But I think we're in kind of a little bit of a affordability correction more than anything. And once those interest rates kind of stabilize and get to a more affordable level, things will pick back up and start going back in the typical history of San Antonio real estate being just a strong, stable, secure market with a lot of great opportunities in a great area. And if you have any questions whatsoever about buying, selling, whatever the real estate questions are that you have here in San Antonio, my email is right here below. Reach out for any questions whatsoever, guys. Would love to contact with you. Feel free to go in and schedule a call with me or someone on my team at the Life in SATX home group. But emailing gets to me directly. You can also text, call us. Again, if you're looking to move here in 2 days or 2 years, would love to help you guys out. And if you are looking for some more information on some of the greatest suburbs of San Antonio, take a look at this video right here. It is a great option for any of those areas that you're looking at moving to. And until the next one, guys, we'll see you there.